Welcome to the Rick Helps Real Estate Show. Is there a recovery in sight? Don't see it. Don't see it yet. And by recovery, I mean in sales volume or sales prices. Neither of those are materializing, so that's what I would call a recovery. If you're a seller, that's what you're waiting for, is a recovery, so that you can get the asking price that you're looking for. And right now, that is not happening. If you're a buyer, you're rejoicing in some of the numbers that are starting to show up. I did see a comment came through on my email this morning referencing talking about a Redfin story, and it said the market right now is causing buyers to be skittish, and we're seeing that in the data. As we note in our first story below, Redfin just reported that new home sales cancellations in June hit the highest monthly rate on record. We explain what that means for agents and how they can prepare. Now, here's where I don't necessarily agree with him. Cancellations do not in and of themselves mean that buyers are skittish and they are canceling the listing, canceling the contract. That can happen for a lot of different reasons. A cancellation, and I'll show you how many we have here right now. We have 12,423 for the year versus last year, a total of 10,000. So actually, if I compare it week to week, 9,582. But canceled can mean something as simple as, well, we had a contract price of $550 and it appraised at $525 and the seller didn't want to budge, so we canceled it. Or the buyer couldn't get financing and they canceled it. Or the home was listed, it was on the market for a long time, and the seller said, let's just take it off, I'm done. So it's one of those three things. It doesn't mean that buyers are skittish and they're canceling listings. I'm seeing that headline a lot. I don't agree with it. So what we are seeing, though, is, and this is an indicator, kind of a, I don't want to call it canary in a coal mine, but you can see here that we've got listings, closings over a month above the listing price, and we're averaging about 12.4% right now. You can see back in 2008, there was nothing going above listing price except where the investors were bidding. I put this into a little recap here for me to simply understand the historical benchmarks and interpretation. Move my ugly mug here. And if it's a hot market, closings over list price are about 24%. If it's balanced, it's 18 to 24, cold market 18, and a cold market floor is 8%. And that's what we have achieved before back in 2008. So that's not a number that shows you that we're growing. Here's our actual pending listings here right now, and you can see they're just tit for tat following last year, but just a little bit lower. For example, we are sitting at 4,271 pending, 4,660 last year. That's not, it's going up seasonally a little bit, but it's not, certainly not up in what we've seen the past couple of years, and there isn't any indication it's going to get better, even as we look at interest rates right now trending at about 6.77%. They were about 6.87 last month as people wait for September. Now, rates could come down before September. It's all up to the bond market and how the stock market's performing, all this stuff. President Trump wants to get rid of the chairman, but he's not going to fire him from what we read, but he may make other changes. Chairman Powell may decide he's going to go. That doesn't automatically mean lower mortgage rates. And lower mortgage rates from the Fed haven't always equated into, lower interest rate from the Fed hasn't always equated into a lower mortgage rates. In fact, most of the times when we looked at gold, they went down 2.5. Oh, we went up a quarter of a point. So the outlook for interest rates for this year is not aggressive. You remember at the beginning of the year, everybody was saying we're going to see 4 to 6 rate cuts. Pat and I on the show were going, I don't think so. I don't think we're going to see that many. Here's what we are seeing as far as the Cromford Market Report. This is the CMI. Notice how it's kind of ticking up there a little bit. Well, that's because listings have not grown. And I track it on a 7-day moving average here, and I can show you that the gold area there is showing the number of new listings per week, with the black line, the number of new contracts, creeping up just a little bit, but there's a gap going the opposite direction. More contracts than there are new listings. That means the number of active listings on the market are not growing. And it's just, it's summertime and people are waiting. Everybody's waiting. If we take a look at our breakdown here by city, and I know I had a person reach out to me this morning, as a matter of fact, saying, Rick, can you send me the CMI data for Casa Grande in Arizona City? Unfortunately, they don't include it in the graph on the Crawford market. I can probably pull it up individually, but they don't put it in a graph form. But this is as close as I can get to it. This is showing you average sales price per square foot per year, showing that Paradise Valley's up 7, Scottsdale 4.9. They don't rank this according to the highest and lowest, but if I just take a quick glance down here through it, I can tell you that it looks to me like the worst one is Youngtown and Goodyear being in negative territory. I took that chart and I had it converted to an executive summary. You'll see some slightly different numbers, like it's showing Paradise Valley growth at 9.4%, highest year-over-year price increase in the Phoenix area. So they're looking at median prices, not price per square foot. So you can go through this report. There's a link in the description down below. If you click on that, I can send you this summary. And it's going to show you here that, get my little browser here thing to work. Come on, there we go. Top performing neighborhoods, Paradise Valley, and down to Rio Verde, it's showing minus 1.4%. And then it's going to give you some pretty good details on Chandler's average price, Gilbert, Queen Creek. Neighborhoods with slight decreases are Litchfield Park, Goodyear, Casa Grande, Sun City West. They are all in negative territory. And areas with notable price fluctuations are Avondale, Casa Grande, and Sun City. And market analysis and future outlook. Breakdown of housing supply, economic factors, financing conditions, and new construction. Pretty heavy read, but if you're into that, it's available there for you. The Phoenix metropolitan area as of July 2015 demonstrates remarkable balance, with most neighborhoods experiencing either modest growth or minor corrections that fall within normal market fluctuation ranges. But what it's not showing you is that there isn't going to be this big turnaround coming into the fall. There are some things that if the pieces line up, we could see some traffic increase. If we do see rates getting in the low 6s, we will see some heavy refinancing activity first, and then perhaps we'll start seeing sales activity pick up. But I don't see you're going to have a rush of new listings show up. I think if you want a bunch of new listings, they're going to have to be in the 5s. And they're probably going to wait till January. I think most of the expired listings that we have been seeing have pulled their house off the market. They let listing expire, and they're done. They're waiting. They're waiting until things really pick up, not slightly pick up. And as I said in the beginning, the canceled listings, it's kind of interesting. The canceled listings, a lot of them show back up as back on market because they're just simply switching agents. My house didn't sell. I'm going to get one that sells because you couldn't do it. So that's where the market is here. If you have any questions, shoot me an email, rick@rickhelps.com. And also in the link below is a link to subscribe to my newsletter. Comes out every Monday morning. Shares the Crawford Market CMI chart for you. It's a quick read. You can take a look at that. Comes out every Monday morning at 7 a.m. Take care.